in this truck dance floor, dance floor. You make waves dance floor. I make waves in this truck dance floor, dance floor. You dance floor.
Shake it. Take it.
Hey everybody, JC Peretz here, founder of Trend Labs, chairman here at Stock Market TV. And, you know, I was on vacation for a week with the family, not checked out, you know, in terms of the market. We put on some trades. Obviously, I like to keep track of the market. But the conversations that I was having, that I have every single day of my life, that definitely slowed down tremendously. I wasn't having any conversations about the market. I was talking about dinosaurs with my kids, and I'm talking about Disney princesses and why the sun sets over there and rises over there. You know, I wasn't having those conversations. And so, you know, Steve Strazza, the man, the myth, the legend, Mr. Steve Strazza has been down in Miami, schmoozing with the financial advisor community, boots on the ground analysis at the local bar scene and the restaurants. I know he's having a good time down there. I get it. But now Steve is back. So what does that mean? This is really the first meaningful sit down that I have with Mr. Steve Strazza in a couple of weeks. Like, it's been a couple of weeks since him and I truly sat down. So I'm glad that you're here. We've got a lot to talk about. You know, many of you were there at the Chart Summit. The Chart Summit was about 60 days ago, 2 months ago. And Steve Strazza sat down. We sat down together, just like we're doing here today, talking about the market. And what was a major theme then? It was energy, right? From a top-down perspective, the bellwethers breaking out, energy breaking out on a relative basis, sentiment very much skewed in one side. And so we've seen what has transpired since then. So we're going to walk with Steve Strazza and essentially update everybody on what's been happening and, you know, what can happen next, right? And Steve's got the hot hand, you know, over just this year alone. I mean, man, we're in March. Steve Strazza really working with the team at All-Star Charts, putting together some amazing models and things that I've seen him do for many, many years, you know, now really showing the rest of the world, which is very cool. And so Wave Trader's a great example of that. And so last week when I was down in Miami, you know, I didn't get the chance to hang out with all of you guys, you know, dive deep into Wave Trader and everything that's happening there. So, you know, what we're going to do today is exactly that. And I'm with you guys, right? Like, I'm a fan here. So, you know, if you're out there listening, be like, why should we care? You want to know something? I care, right? I care because I've seen this guy do it for years and years and years. You know, Steve Strazza was the director of research for a long time at allstarcharts.com. You know, legendary technical analysis research platform, no doubt. Steve Strazza now, chief market strategist at All-Star Charts. And, you know, really using the resources that All-Star Charts has always, you know, brought, you know, the whole team, all the technology, and really incorporating his own strategies and using that research in his own ways. And now he's showing you guys this for the first time. So I'm super excited, you know, to essentially get an update from that Chart Summit conversation because it's a different market, guys. You know, the dispersion that we're seeing in returns from one sector to another is night and day. Financials were a huge winner. Energy couldn't do anything. Now energy's putting up record numbers and financials keep falling. Very different market. You know, technology stocks really stopped going down. These software stocks stopped going down a month ago. Ton of relative strength in crypto, right? So there's a lot of interesting things that are going on. And quite frankly, Steve Strazza and I have not sat down and had that conversation. So I'm very much looking forward to this. I hope you guys are as well. Stop everything that you're doing. Put the phone away. I put my phone away. Look at this. I'm putting my phone away, right? I am here. I'm focused. If you're a note taker like myself, you know who's a note taker? Fun fact, Steve Strazza walks around with a pen in his pocket. He just always has a pen. He's one of those, right? Because he says, well, you never know when you're going to need a pen. True story. Steve Strazza, the man, the myth, the legend. He walks around with a pen because you never know when you're going to need one. See, this is the kind of guy I'm talking about. I can't. The fewer things I have in my pockets, the better. Steve Strazza, nope. I'm going to bring my pen with me. You never know when I need to write something down, right? Steve Strazza pretends that he doesn't have a notepad on his phone, that he could just type it into the notepad like all the rest of us when we come up with a good idea. Nope. Got to have the pen. So grab your pen in the spirit of Mr. Steve Strazza. We're going to talk about my favorite thing, literally my favorite thing, particularly when it comes to work. You know, I like good food. I love my family, nice bottle of wine, football game. I love all those things. What we do here during the day is we do a lot of research. We look at a lot of charts, and we do that so that we can make a lot of money, right? And that's what we're here to do, to make fast money, make money fast. Yeah. Yeah, you can make money slowly, sure. There's that. We do that too. But today, this conversation with Steve Strazza, we're talking about how to make money fast money. And without any further ado, can I bring him on? Make sure, did he bring your pen with you, Steve?
I heard you. You told him about the pens, huh?
Was that a secret?
No. This is my favorite Lucky Cross pen. I've had this for, I'm not even kidding, probably 15 years since my first job at Deloitte. Long time ago. Still have it. Moved a lot. Have had a lot of new offices. But once you get a special pen, you got to hang on to it. Hey, JC.
My mom gave me a Mont Blanc once. That's like a fancy pen, right? A Mont Blanc.
Very nice. Very nice.
Yeah, I don't know what happened to it, though. That's how much I loved it. Thanks, Mom.
Oh,
Love you.
Don't tell her. I won't tell her. Hey, look, I am psyched for the UConn game at 7 o'clock tonight. So I need something, to kind of like spend my time to get my mind off it.
Yeah.
So this is perfect. The way that this
totally
felt.
with you. Guys, this is a great lesson. Great lesson. I'm so with you. Guys, if you are like me and Steve, you look forward to like a football game or a basketball game and you can't concentrate because it's a great time to look at charts, and talk and focus on the market, distract you from that. Man, you are so right, Steve. So lesson number one, you're already excellent lesson right off the bat. So if you're paying attention there, folks, great way to get your mind off the game later on. Couldn't agree more.
There's nothing I'd rather do to distract me from game time than nerd out about options and the market and trading with you.
Yep.
We didn't get enough time to chat in Miami. I saw you for 5 minutes. I miss you. I thought we would hang, but next time. We'll talk now.
Listen, it was good to see you. I saw you hanging out with the folks. You're doing the right things. Love it. Good to see you though, where I grew up. Isn't that nice? Wasn't that lovely?
I think it's my favorite city, JC.
Woo!
Lucky guy.
Okay. Listen, you know what they love down in Miami? They love fast things. They love fast cars, fast boats, fast money, right? So now you're all inspired in Miami. Talk to me. What are we? Because we haven't done this in a couple of weeks, Steve. We haven't done this. I'm very excited.
No, and that was a sick transition. We are talking about fast money charts today, right? Fast money trades, fast money charts, how to get money in the best trends in the quickest ways, finding short-term trading opportunities with our little-known chart patterns. We call them coils. Some other people call them other things, right? But we're just studying the supply and demand, focusing on pattern analysis, heavy reliance on volatility compression, right? So we know when that move is likely to come and the magnitude of it when it does come, right? And then we're incorporating a bunch of momentum with the trading system that we're going to talk about here today too, because I don't want to pay for a second more time than I need to, right? Options premiums can be expensive, especially in a market with heightened volatility. What we are experts at is getting in at the optimal time so that you're not overpaying at all. You're getting in just as you need to. You get your money back fast, and then you have, upside to let your winners ride. So it is a simple, repeatable process that allows us to identify the biggest market waves, before they're talking about them on the news. Energy is a big one today. We're going to get to that in just a second, right? Typically, when oil and gas headlines are plastered all over the television and the newspapers, it's time to take those profits, move on to the next thing. We like to zig when the market's zagging. It also allows us to target 3x, 5x, and even 10x returns on very short time frames using weekly, monthly options, right? Depends. We have so much liquidity in the weekly chains for a lot of these big cap tech stocks, big growth stocks. We have a lot of optionality in really nailing that timing, right? Not buying more time than we need. And it also allows us to win in both directions, right? So what do I mean by that? We're going to trade calls and puts, right? Depending on where we think that next wave is heading, we're going to get long or short. We can do well in bearish environments with this system. Also, we have examples we'll show you in just a minute. So the truth about short-term trading strategies, how do most people kind of mess up? What happens is most people only capture a fraction of the move, or they do it in a highly inefficient or high-risk way, okay? And then you hear all the horror stories about trading. Trading gets a bad rap, especially short-term trading systems get a bad rap for this reason. They're trading their best ideas using one time frame, one trading vehicle, one system, right? Not flexible. Well, what if you could capture every move in the market, both directions, bull markets, bear markets? Even in a primary uptrend, we have counter trend waves, right? So what if you could make as much money as possible using leverage, using options on a primary trend wave, an up leg wave, and then also make money on a counter trend wave within the context of a broader primary trend? We can do all of that here because our time frame is just weeks to months. And typically on the best trades, I'll show you in just a minute, we double in a day, JC, 2 days, right? Those are the best ones. They work right away. We get our money back. We say, okay, I'll let this winner run, see what happens. Then we look back when you do get a runner, right, or some sort of reaction rally out of the pattern that we're playing. 5Xs, 10Xs are actually pretty easy to come by once you're just getting, quick and steady doubles, which is what we aim to do. You ready to see some examples?
See it.
These are all things that we've done in the past, handful of weeks since like the last week of February, right? So I wanted to start out right here. It's the only bearish trade we've put on since we started doing Wave Trader.
Are you showing? Can I see it?
Publishing Wave Trader. Am I sharing the wrong screen? Hold on. Tech support. That is my bad. I had the same slides open twice. All right. So we've been through these couple of slides here, and now we're going to hit the charts. Gene, is it working now?
Perfect.
All right. Sorry, guys. So all these trades, like I said, go back to maybe the last week of February. Market's been rocky. Probably seems like it's been a lot worse than it actually has been. We've really just gone sideways since the Iran war stuff started last Monday. However, some groups have fared a lot worse than others. We use relative strength, or in this case, relative weakness analysis to lean on the weak ones on the short side, right? And then lean on the strong ones on the long side. So we said, hey, if the market rolls here, what's probably going to get hit the hardest? This was back on February 23rd. Financials. Right? Banks, that's been, JC, you were talking about it this morning. The sector culprits right now in this cycle, private equity, right? It's financials. So we went in, we saw this nice little top formation, Bank of America. We bought some puts, $50 puts. We went 2 weeks out, March 6th expiration, paid 73 cents. So anybody could really dabble. It means, one contract costs you $73. The Strazza indicator, which is our measure of volatility compression, showing volatility down on the floor. Volatility, as we know, is mean reverting, right? It goes from a contraction phase to an expansion phase. We're looking at this chart saying big move is coming. We're betting it's lower the very next day. Boom. The puts hit 190. We got a max return of about 160. We flipped the book really quick on this one. Closed them out. You got that nice pop. And then you actually had like a quick reversal back to that neckline in the coming days, right? So we took a quick profit on the short side. If you were in this trade, you would have turned $1,000 into $2,600. $2,500 position would have got you $6,500, or $5,000 position would have got you a $13,000 profit.
Hey, Strazza, on that Bank of America, so what are you waiting for to trigger the entry point? Just a close below that former support?
Yeah. So if you see here, we had a little shelf of like 2 pivot lows from prior days and weeks right here on this right shoulder, right? Closed below there, and that's what got us in. And we are looking at 65-minute candles here, so a little bit shorter time frame than we do for breakout multiplier. We also have a momentum indicator called the takeoff meter, which we're not talking about today, but once you get in and become a member, we have all sorts of educational content and run-throughs on what that is and how to use it. And we're also building a tech tool, glad you asked, where you can actually measure the momentum indicator, our takeoff meter, and the Strazza indicator, which we call the swell score in Wave Trader. And that'll all be in like a nice matrix situation in rangefinder where you can sort and filter by these different scores, and it'll help you, find ideas.
I love that
But
we
really
could just
momentum.
I love that we could just keep building things, and nobody could tell us that we just can't build things, and you could build things, and somebody else, and we could just, isn't it great? What an amazing thing.
Our tech people might say slow down, but they can't tell us to stop.
Oh,
Say,
they're
that's
always-
fine. I got a long list of stuff.
Exactly. I love it. All right, so we're burying the lead. Everybody wants to hear about energy. I want to hear about energy. I was talking to Jason Pers earlier today. I said, people are telling me this energy trade's over. What do you think? He's like, they're crazy. They're crazy. So tell me what's been going on.
So we've been in energy. We've had a big overweight in energy in all of our portfolios, short-term, intermediate-term, long-term, right? Been there in breakout multiplier. With Wave Trader, this was before the Iran war news. I have no crystal ball. I have no magic 8 ball. I had no idea that a war was about to break out in the Middle East. But we bought the ExxonMobil calls on 2/26. So what was that, a couple days, right, before this really started happening, the geopolitical flare-up? It was simply because of the chart, right? When you zoom out on a chart of energy or ExxonMobil, monster bases just completing into continuation patterns. You have this really nice coil that was in place for the last 3 weeks of February, governed here by the VWAP from the pivot high. Here's the takeoff meter that I was just talking about. Dark blue is really that signal for us. That's when you get an extreme reading to the upside. So we got that reading. We got in, I believe, about 2 days later. The Iran war hit, right? All that headline risk, came to fruition. You got a massive pump in energy, and we sold right into it. It actually says we sold the double here. We didn't. We almost sold a quadruple, a couple days later on this huge spike in Exxon. It faded and fizzled after that. We only sold half for 4x. Trade still ended up being a winner, even though we expired worthless on the remaining half. So it hit a max return of 385%. That coil worked beautifully, even though it didn't have follow through. I think energy is still set up and will be back in the future, though. What we've really been doing more than anything, I think I did the members call yesterday. I think 85% of our current market value of our portfolio is in technology or large cap growth. So this is what I'm talking about when I say we're zigging while the market's zagging. While everybody pours into energy and worries about financials, I see tech stocks bottoming. I see software coiled up and ready to go. Best one's already going. In this case, JC, the takeoff meter alerted us that momentum was on our side. You see the Strazza indicator here showing extreme volatility compression, right? And then it's the price chart too, right? Just clean and clear polarity zone. Don't forget about that. That's the best of anything at the end of the day, right? Everybody could see why we got in here when we did. So we bought the calls right here on March 2nd. We sold the double 3 days later on March 5th. This one had a max return of over 300%. Worked just how we wanted to. And then we started going back and finding this pattern in other places and trying to run it back, JC, right? Like that's something we'll do a ton where we're looking through thousands of charts a day. If I start seeing patterns that look very similar to other patterns, happened recently in materials, we had these nice tactical bases and all these different material subgroups. Every time we saw them, we just bought them. And then if we doubled, we would keep buying them next time we would see them. That's how I feel about software and tech right now. Here's Amazon, which I consider tech, whatever, mega cap growth. Another nice little tactical base, looked like the one I just showed you in service now. Big green candle blowing out of that base. We got in on March 4th. We got 100% return, I believe 2 days later. We sold the double on 1 day later on March 5th. Again, on this one, see the takeoff meter go dark blue. See that volatility compression go from an extreme low, crossover, start to move higher, signaling, hey, expansion is underway, right? And then we have to make the determination of, well, what direction is that expansion likely to come in? In this case, it was pretty easy between the little momentum surge that we have and the lower pain there and the big price level being taken out and the VWAP being taken out. So I'm betting that volatility expansion comes in the form of upside momentum. It did. We got a quick winner. What's really nice about this And what I like most about this, some of these charts that we're running through in our recent performance is that the market's gone nowhere, maybe even slightly lower after today. We had finally a real red candle today for the first time, since this volatility and the news started hitting last week. And through that, we've traded mostly on the long side, taking quick profits, and have done really well. So if you were in the Amazon trade, you could have turned 1,000 into 2,000 on that 2x, 2,500 into 5,000, 5,000 and 10,000. In a normal market, right, where you're not getting false starts, you're actually experiencing follow through on some of these moves, that 2,000 becomes 3,000 or 5,000 really fast, right? The propensity for these trades to become 3x, 5x's, even 10x's, right? Big multi-bagger winners is heightened in a trending market. We've been taking quick hits and nailing nice profits in a really sloppy, sideways, trendless market. So I think that's great. And I think we're coming out of that very soon, which we'll talk about in just a minute. I think the market is looking to establish a tradable low here soon, and tech stocks will probably lead out of it, and we'll know exactly what to do. Excuse me. So the market moves in waves, not straight lines. That's where our opportunities kind of come from. Most people aren't emotionally prepared to miss 2 or 3 times before they win big. We're defining our risk in the most brilliant way, using call options to establish long exposure and put options to establish our short exposure. We know on day one, when we enter that position, exactly how much money we can lose. And a lot of times we'll go in and say, this might not work just here next week, right? But it probably works the following week. And we'll go in and take a shot, right? Use some responsible risk management principles, which we talk about in our members call every week, and say, all right, I'll take a shot here, maybe half a position size. If I'm wrong this week, I can come back, reload next week, buy it again. We know, because we've done the math, and I've been running this system for over a decade now, that once you do win on these volatility compression patterns, right, you do get these outlier winners, very many times, it's very common, and they'll pay for a handful of losers. So I'm happy to go in, be wrong on a trade, come back, reload, put the same trade on if that pattern or that setup hasn't changed. And that's where most traders kind of slip up. We talk about these things, and we talk about the psychological hacks that can keep you kind of in the game. Selling the double is a big one. Position sizing appropriately is another big one. Diversifying your exposure, being in a couple different themes, right, at the same time is another way to do that. We talk about all these things, right? So we'll go through exactly what you need to do to kind of train your mind to make the most of these waves. And then once you learn how to trade them the right way, you'll start seeing better results almost immediately.
Now, Strazza, here's the thing, right? So the whole wave thing, I absolutely love. I mean, if you talk to old technical analysts, old traders, fund managers, they're always talking about the waves, and they're talking about the ocean and the big waves, and then you have kind of like, the overall tide, and then you have the little trickles, right, which is the noise. Yep. Right. So that's great. And I mean, it makes a lot of sense. But how do you specifically spot the different waves? Right. Can you walk me through how you're spotting the different waves, and then the trades that come about them? How are you picking that? Can you walk me through that?
A nautical man, like a boat person, could probably have a great answer to this question, right? Full of fantastic analogies, right? I'm not a boat person. I'm not really a surfer either. What I do know is that you can study the motion of the ocean or the motion of the market in a handful of different ways. I'm not some sort of day trader who's just coming in, has absolutely no context or background. I get to my desk every day with a number of thoughts in mind, like the primary trend, right? Breadth profile of the market, current volatility environment, right? Who's been in control of the tape, intermarket trends and relationships, what's going on there? What are interest rates doing? What's the dollar doing, right? What's going on with commodities? And I'm taking all of that and putting the puzzle together. Joe's a surfer, and he says, you could see the swell coming out in the ocean, right? When a big move is brewing, you see the swell, the buoys start to move, like way out, on the horizon or whatever, and it's coming. Well, that's kind of how I felt when I looked at a chart of energy a couple months ago. You could feel that swell coming. The Strazza indicator, or the swell score, which we'll have in Rangefinder for our members to filter and scan by, hasn't been this low in, God, I don't know, maybe forever. Going back as far as this chart goes to 2000. So as long as the sector spider's kind of been trading, you see this high and tight coil, which is actually a multi-year coil right up at the base breakout level. And buyers just pounding on the door of that polarity zone over and over and over and over again. absorbing the overhead supply at this level, the same price or the same place where prices peaked back in 2007. And then again, whenever this was 2014, I believe, right? So you know a big move is coming. Strazza indicators telling us. Then we just use price to keep us on the right side. I could tell the story in a even more nuanced way and say it's a commodity super cycle, things like energy and copper and base metals, industrials, materials. These were some of the strongest stocks back during the COVID cycle, right? This is 2020, 2021. Energy vertical line higher, bang right up into that resistance level, straight sideways, consolidating, beautiful bullish fashion. And then you get the eventual breakout, the upside resolution here, which we've circled in green. So we were ready for it. We were waiting for it. We were actually anticipating. We were buying in this coil, right? Getting ready. We had options of all different durations and sizes and all different vehicles. Finally got that move that we were waiting for. We were prepared. Now I think it's probably time to take profits and a lot of the energy stuff, get ready to redeploy them into that next big wave. And I think it's brewing right here. Software stocks have been absolutely decimated. Okay, they've been crushed in the middle of the bull market. At the same time, and look at the, again, polarity zone, now to the downside, huge support zone, same spot where prices bottomed in 2024, 2025, again, just a couple of weeks ago or early February. At the same time, here's a relative trend of technology versus the S&P 500 in black, a lot of software in there, and then semiconductors relative to the S&P 500 in blue. You see one going straight up and the other one's been going, steadily lower since September or October of last year. I don't buy the narrative that hardware is going to be this huge winner and semiconductors and chip makers are going to keep growing to the sky while software stocks, right, the ones that use the chips, use the semiconductors and build on that hardware, right, to make the software, that they're going to fall off some sort of cliff and not bottom and try to follow semiconductors higher. For as long as I've been following the market, JC, semiconductors and software, they go together, right? These are the two biggest subgroups in the technology space. If you're a growth investor, you know these groups well. They've been two of the best themes for 10 years now. I think there's some big catching up to do for software. This is the Mag 7 ETF mags digging in at the VWAP, the support level, right? The support zone to watch off of the April lows from last year. We're right there. It's the same place where we peaked before the sell-off in February, March, April of last year. Buyers are showing up. They're already showing up, right? In this messy tape, volatile environment of the past couple of weeks, they can't break down the mags, right? They can't break down the worst groups. They couldn't break down the software either. So I think they're going to dig in. Big rally here. You're going to get a nice upside reaction off of a tradable low as soon as it's in place. And software will be the place to be. When you look at the technology sector spider, XLK, the Strazza indicator is signaling some extreme volatility compression. It's really as low as it gets, right? At the same time, you get that VWAP from the April lows, again, acting as support here. Perfectly logical level, exactly where we'd expect buyers to show up. They are. I think we fail this top in tech, and a big move is coming. And here's what they look like under the surface, right? Individual names all coiled up. NVIDIA's been dead money since, late summer, fall of last year, straight sideways. This is one of the best stocks this cycle, past couple cycles, right? Almost a straight line higher off of those April lows, then into just tight consolidation. When this resolves, you're going to get a big move. For now, we are leaning that move is going to be to the upside, and we're going to be wanting to buy stocks like NVIDIA. They also happen to be some of the most liquid names in the market, really the most liquid vehicles in the market. So there's a ton we can do from an options trading standpoint. We have so many different vehicles and ways that we could play it, and liquidity, in all the weekly chains and now even daily chains. So we're having a lot of fun out here taking advantage of all that, new options market liquidity. Then, and this is another one that we talked about at Chart Summit. What if the world is, falling apart out here and the geopolitical risk, is just too much and they start taking some charts down? Right now, like I said, it's just financials. What if they start taking some other groups down? Today wasn't too pretty. Let's see if there's bearish follow through tomorrow. I think this line in the sand in the Russell 2000 is going to keep us on the right side. This is the single most important chart in the world for me right now. We're right back to this key level. This is where the small caps peaked out and rolled over last cycle back in 2021, right? And then we hit that level again in 2024. It knocked it down, big drawdown, Q1, Q2 of last year, dug in, finally got the breakout. Now we're testing it from above. So the world is not coming to an end, and we're going to continue to lean on the long side, look for opportunities on the long side. That's going to be the bulk of our exposure. We'll still do short things and have some bearish positions, but the bulk of our exposure and what we're thinking and trying to do out here will continue to be long as long as the Russell 2000 is above its prior cycle highs. And we're right there right now. What a perfectly logical place, right, to see this little corrective wave bottom out, reverse higher.
It's now or never, Strazza, right? It's now or never. They're going to dig in and they're going to get them or not. There's a lot of charts that look like this, retesting these levels. I like that you're putting your foot down, saying this is it. This is what we're buying. I like it.
And it's not uncommon to see tech stocks or big growth lead off of corrective waves or market lows, right? And I don't think this time will be any different. Energy had their time. Industrials have been great. The value trade's been great. The international trade's been great. Everybody's forgotten about big growth, mega cap tech. Everybody's scared about AI eating software and all these, spooky narratives and Oracle this and the private credit situation there. I kind of like that. I love that. I think it's a fine sentiment reset. Maybe one that we really needed since last year. So I think we're pretty much there, JC.
All right.
Some questions?
Yeah, I mean, listen, right? The charts are there. Right? We can see what's in front of us, right? Why do you share it? Right? Why don't you just keep it to yourself? Right? That's a big question that people come up. Well, why, if you're so good, why are you telling other people about it? Why don't you just shut up and stay in the corner and mind your own business and never talk to anybody and never come out of your hole, right? And don't socialize. Why?
Yeah, if it's so easy to trade off the charts, why isn't everybody doing it? Well, you've probably been on Twitter too. 90% of the technical analysis out there is bad technical analysis. Is the problem. We're some of the 10%. Ourselves, the analyst team, everybody that we work with, we're doing good technical analysis. But there's a lot of, I would call it chart propaganda out there. People doing all the wrong things, getting mixed up. Then they think, oh, charts don't work. It's not that they don't work. Your charts didn't work. You taught me that. And the other part is, you really have to be a bit of a generalist, I think, to make the most of different market environments, right? So we put that whole puzzle together, that whole intermarket puzzle. We zoom out, we look at the primary trends, the structural trends, and then we zoom in, right? We use this top-down approach. We zoom out on the charts so that we could zoom in better, right, and know what to do. So we're really taking a holistic approach to technical analysis, which I think is different from most people.
And so why are you telling other people about it?
I have had the time of my life building these products and sharing all this research with the world. I don't think, if you asked me 4 or 5 years ago, when we started, we had the blog. You've been doing the blog for 15 years now. We started doing the morning show. My answer to you wouldn't have been, I'm going to start talking about all my trades publicly and publishing them. And it's just how things went. We did one service. We did Breakout Multiplier. It was an absolute blast. We ended up building an incredible community. Right, it's one of my favorite things to do every week is go and hang out in the chat. We all learn together, kind of, kick it around, talk about what we're doing, how we're managing out of trades. So this has been a tremendous joy for me. I'm not a hedge fund person. I don't want to run a hedge fund. I don't want your money. I don't want to manage anybody's money. I don't want to touch anybody's money but mine, right? Happy to come on here, talk about what I'm doing, what I'm trading, what I'm seeing. And there's nothing I would rather be doing, and that's why.
Yeah, it's really cool. Good trading. It could be very lonely and, it's not something, so if you're part of a community, you're all in this together, navigating the market. Like I get that, right? That's how I came up in this business through, social and community. And I mean, it really is cool to be with other people that are trying to accomplish the same thing. Now let's talk about timing. Why now, right? You're thinking about, some short-term options trading to supplement some of the other things you're doing. Why now though?
Well, there's a couple of reasons. I think, being super specific to this moment right here today, volatility's heightened. It's super elevated right now. VIX is at whatever it's at, right? Futures are down, JCC, every morning 1%, 2%, 2.5%. Right? They're coming in and just hitting the market every morning. So premiums get juiced, and you end up paying more than you usually would to buy calls and puts. So that makes it, as an options trader, in my opinion, somebody who's often going out 45, 90 days or even longer, I don't want to buy all that time right now. At least not as much as I usually would be happy to. because you're paying up, right, for all that time that you're buying. So with Wave Trader, we're going out a couple weeks. It really reduces or minimalizes the impact of that heightened implied volatility, right? Because we're only paying for 2 weeks time, not 2 months or 3 months or 4 months time, right? And I think that's good practice in a messy market like the one we're in. The other reason, right, longer term, and this isn't transitory, this is here to last, is that it's the best time to start trading short-term options because we've never had more options trading options. You could do anything in the options market. You could do it after hours. You got all the liquidity in the world. Some of these things are now listed Mondays, Wednesdays, and Fridays, as if the weeklies weren't enough. You know, liquidity everywhere. If you look at the monthlies and the stuff that we're trading in Wave Trader, all these large cap stocks, plenty of liquidity. Now we have plenty of liquidity in the weeklies and some of the dailies as well. So there's just so much that we could do from a market mechanics standpoint, right? As capital markets continue to evolve, that's only going to get easier and easier. Right, so you might as well get involved now and learn how to trade options because they're not going away. Only more and more people are going to trade them more and more in the future. That's just the way things are headed.
Yeah, listen, there's no question that the liquidity in the options market and the amount of possibilities that you have to make money in the market is increasing with every single day that goes by. And there's a lot of things about the market that we don't know, but that trend of more and more liquidity in more and more instruments across the board, that isn't going away. You're seeing it. We've been saying it. The market keeps proving that. The regulators keep letting them do it. That's not going to slow down. So, all right. So walk me through Wave Trader as a member. What does everybody get?
It says 15 to 20 trades per month, but you're probably going to get more. We've been doing almost one a day, a little bit more than one a day, really. So I would say it might be 20, 25. Anyway, every month you're going to get this in weekly, monthly calls. Like I said, a week to a month to expiration that have the potential to generate quick 3 to 10x returns. The best ones were right away. You get your money back fast, right? And then you got cash back on the sidelines that you could redeploy. And what ends up happening, right, when we go on good runs, and we're doubling quick, getting our money back, is we just keep throwing lines out, right? We're planting seeds everywhere. We have exposure to every theme. Nothing happens in the market where I'm not like, oh, nice. On 5X today, Nebius did a deal with NVIDIA. Oh, right, I forgot I even had that, right? We get our money back fast. We just throw more lines out. We get exposure to a lot of things with a very low capital constraint. So this can be done with a small account size, which is nice. We have weekly calls every Tuesday at noon Eastern time. They are so much fun. We had our first one just this week. Absolute blast. Good group in there already. I already got a really good feeling about the new community that we have here for Wave Trader. We answer questions. You could send in questions via email if you can't make the call. So we'll do mailbag stuff. But then we're like talking. You know, we're talking it out, kicking different ideas around. Some of the members have, been trading similar systems for a long time. They'll come and say, hey, I do this, and we'll talk about it. Kind of brainstorm ideas, figure it all out together. That's one of the best things. A lot of education in there. I talk about exactly how I'm treating my remaining positions and different things, what themes I want to be really heavy in. We'll talk about like food and golf and sports sometimes too. So that ongoing education, really important to help members make the most of the system, really. And then coming soon, this is what I'm most excited about. Strazza indicator's awesome. Our members have really loved that. It's my favorite indicator to use. It's, in my opinion, the single best indicator, right? It's the best thing we got besides price. Now we're also going to have the takeoff meter, right? Which is just a little short-term momentum score that's going to show you like when you get this short-term momentum surge where you get that signal early enough that you haven't missed anything, right? Trade hasn't even gone yet. We get that momentum signal. So we're going to combine those two things together, throw them in something that's similar to, some people are probably familiar with the squeeze engine. So it'll be on rangefinder, it'll be a nice matrix, our entire universe of stocks. And you could filter by both the Strazza indicator and the takeoff meter, see when momentum is lining up with the volatility compression. And you can end up, once you learn the system, you'll go in and use this to find opportunities and new trade ideas on your own, is the idea there. We want to empower our people, empower our members to be able to go and run the system on their own, right? Not holding anybody's hand. We're going to tell you exactly how I do it, how I use these indicators. Then we're going to give you the tools that you need to go and make this system your own. And that's what most people do. And it's a joy to see.
And I could be the first to tell you, I have been watching Steve do this for years and years now, being on the golf course on a Friday as he's unwinding some of his positions. So these short-term trades that Steve is putting out with Wave Trader, this is the first time anybody's been seeing this. He's been doing it for years behind the scenes, but this is the first time anybody sees this. So Steve, if you could put up there, so 1 year of Wave Trader, you're saving $2,500, so $1,495 for the year for full-time platform access, 30-day risk-free. And then this is the best value here, the 3-year membership. You're saving $5,500. You're saving $5,500. So it's $2,495 for 3 years. That's the one you want. Yeah, best long-term compounding value. No kidding. I mean, one trade pays for it for 3 years. You're saving $5,500. Damn, that's great. So, and by the way, you lock this in, this promotional price, you lock this in for as long as your membership is active. You're grandfathered in, no matter how much Steve's going to raise prices. And if you know Steve, you know he's going to raise prices.
Never be this low again. I'm not kidding.
You're locked in. So take advantage because he will raise the prices. That's the guarantee right there.
I mean, it might as well be free. No, but seriously, you come in, you make 1 or 2 winning trades. We basically were 7 for our first 7. Technically 5. The other 2 that didn't double were up 90%. Most people go in and take those profits, especially in the sloppy tape. So whatever. 5 out of our first 7 trades, it paid for many people's memberships already, right? And I would imagine that'll be the same case next week, the following week. So you come in, we're going to get some hot trades out, and it'll help pay for that right off the bat. 63%, almost a Fibonacci number, not quite.
63% off. I was noticing the same thing. God, great minds think alike. Scary thought that you're thinking the same thing as me. So $1,495 for the year or $2,495 for 3 years. Wow, that's sick. It's funny. The first question coming in, what is the percentage of winners and losers? 7 for 7. How's that for a start?
Yeah. So that's, all we have. We haven't tracked them on this short time frame for too long. What we do have to go off of is the breakout multiplier statistics. And there, we've been tracking that for almost 2 years now, and our win rate is about 60%. We double on about 60% of trades.
Thank you for that, Steve. So are the calls recorded and accessible to the community for review and extra learning, the weekly calls?
Yes, definitely. Everybody's talking in there. There are great questions, and then we're putting out posts throughout the week as well.
All right, so click the link in the show notes if you're watching on YouTube. If you're watching in the chat, click on the link. The link is easy to find. 1 year membership, $1,495, or $2,495 for the 3 year membership. Let's see what other questions we have in here for the Bollinger Band. For the Bollinger Band with simple average at the bottom. Do you wait for a crossover to enter, or do you simply use a tool to note the extreme in narrow market action? Good question.
You want to see it compress to an extreme low, but ticking higher off that low. So you might not have the crossover perfectly in place yet, but you want to see it moving in that direction. I have a good example here. C-Tech, I wouldn't not buy this because it hasn't crossed over yet. Okay. That's probably going to cross. We're off the lows. We were off the lows just a couple of weeks ago. This is a longer term Strazza indicator. And then what you're going to see is the swell score in rangefinder is very similar to this indicator. It's just a numerical representation of it, the way that we could score it from like a 1 to 100 basis. So no, I don't think you need the crossover. I want to see extreme compression. I want to see momentum out of that compression, and you'll see that indicator start to tick higher.
The next question, what is the account minimum needed for Wave Trader? Good question.
Great question. Always a good question. I should have led with that. I would say 10,000. I don't think you want to do much less than 10,000. Ideally, you want to do more, but you can get by with 10, have a diversified portfolio. You can participate in most of the things that we do. Some super high price stocks, like somebody's got to tell Microsoft to split, right? And all these big cap techs, that would make things easier. But a lot of the stuff we're doing, lower price stocks, and you'll have no problem getting in, buying at least 2 calls so that you could use the sell the double rule. Can't buy just one. But we talk about all that stuff on the members call. So general rule, let's say 10,000.
No, it's a great point. You want to have enough liquidity to have a lot of positions. You want to buy at least 2 contracts, right? All of those things. Now, here's my favorite part is that Anybody can do this, no matter how big or small, because these are the biggest, most liquid names. So, hedge funds out there, people who have a lot more money to put to work can also participate in these markets. There's literally plenty of liquidity. I absolutely love that part. Underrated because you're getting better fills and stuff too.
Yeah.
So there's other benefits to this particular universe.
A lot of times with breakout multiplier, we will buy some thinly traded contracts and the spreads are wide and, people will struggle to get into them. Maybe, the pay up for them. With what we're doing here, we're buying NVIDIA calls, Microsoft calls, Salesforce calls, etc. Liquidity is very rarely going to be an issue. You have tight spreads. It's almost like trading a stock. So that's nice. It helps a lot from a trading and execution standpoint. It's great. It's lovely. It's not a headache to kind of put these trades on.
We got another market question here. Steve, what determines the strike to you? Seems like Bank of America was 5% out of the money puts.
Yeah, we look at the delta for that to choose the strike, really. We're in the range of 25 to 35. Try to stick around 30 as a sweet spot, so a little bit higher than some of the breakout multiplier trades. And there will be times where we'll go lower, and there will be times when we go higher, and we'll explain why and talk about all that on the calls. But 30.
All right, guys, you're getting 1 year membership of Wave Trader, $14.95. You're saving $2,500. So $39.95 you're getting for $14.95. And then the 3-year deal, that's the one you want. You're saving $5,500. So this is $79.95. But today you're getting it for $24.95 for 3 years, and this is a 30-day risk-free. So somebody who likes good risk versus reward propositions, this most definitely is one of them. We got another question: is this a system, or will it trade will the trade recs come out? So if the info is only email or SMS, are you working on SMS right now? So currently, right now, it's what, email and through rangefinder. Right? How do the trade recs come out?
Email's the best way, right? And then you can set an alert for like the sender. Email, you're always going to get, we're doing that. We're responsible for that. We send the notes. I'm buying them as soon as we send them. So you're getting the same price as me if you're on that email quickly. You could also go into rangefinder and set like notifications, alerts in rangefinder. Those will come out in like a 1 or 2 minute lag, if that, maybe 60-second lag. Email will be the quickest. And I think that the tech guys are working on SMS, I believe. So hopefully that's coming eventually.
Yeah, nice. So you'll be notified right away for any trade, anytime there's a position being put on. All right, so guys, listen, I really appreciate you guys being here. I certainly, love the conversation. I was very curious on, Steve's perspective because we haven't had this sit down in a couple of weeks now. So I very much enjoyed this. I hope you guys did too. By the way, kudos to you guys for taking time out of your day, to be here, get some market perspective, learn something new. I certainly did. I mean, Strazza's, building his own indicators and naming them after himself, over here, right? So like I'm learning also Strazza indicator. That wasn't in the CMT when I took it 20 years ago. Will probably be not yet, right? Not yet. That's what I was thinking. Same thing. Oh man. Listen, if you're going in and out, won't you trigger the pattern trader rule and the $25,000 minimum? So if you are day trading these things, are you going to trigger that PDT pattern?
It's very rare. You will have a problem with that if you're below 25,000. So if you have a $10,000 account, however,
if you're a day trader,
it's rare that will double in the exact same day, right? So you just wait for the next day and that should be okay. I'll also say there's legislation that's like held up in Congress right now that they're supposed to pass through by like the second quarter of this year. So like now, any day now, that does away with that nonsense pattern day trader, $25,000 minimum, and they're trying to democratize investing with some new bill. So hopefully that's gone soon. We don't have to worry about it at all. Even with it, it's rare that it happens. I think you get a warning or two. So if you did make the mistake and buy and sell on the same day, it's not like, game over. They warn you, don't do that again. But you just wait till the next day. Usually the doubles, the quick doubles, they come the very following day. It's rare that they're the exact same day.
Yeah, no, it's a good point. All right, guys, listen, this is Wave Trader. Excellent job, Steve. Keep up the good work. 7 for 7. Not bad. Not bad. Nice job there. Nice job. So So $14.95 for the year, or $24.95 for 3 years. That's the better one for sure. It's risk-free at any point in the next 30 days. You decide for whatever reason that it's not for you. Just email Mary, full refund, no questions asked. And then just thank you, Steve. Thank you to you guys. Thank you to the team behind the scenes for putting all this together. I definitely learned something. I hope you did too. I'm JC Peretz. This has been Steve Strazza with the Wave Traders. Sign in. I'll see you in there.
Thanks for joining us. Hope to see you in the room.
Click the link. Enjoy.